the importance of revenue growth. And we have a index process for OGIG that is based on a lot of research to determine what kind of stocks in the internet services space, what kind of stocks do better than average. What are the metrics that help identify the stocks that do better than average or that do well? And this shows you why revenue growth, why we feel it's so important. Stocks that have stronger revenue growth have had stronger performance. The stocks in the first quartile by revenue growth have had that much stronger performance, 53%, compared to second, third, fourth quartile, you see going down from 53 to 30 to lower numbers. And so it's all about the revenue growth is our view of really, really important characteristic. In OGIG, stocks are selected for revenue growth. And like in EMQQ, maybe the selection process is a little bit different. Let me give you a minute, Kevin, to talk about the selection process for the stocks that are in EMQQ.
Well, our selection process is pretty straightforward. We own every single publicly traded emerging or frontier market internet company, as long as they meet our market cap and liquidity minimums, and then it's market cap weighted. So if you're a publicly traded internet company, if you're the Google of Russia or the Uber of China or the pick your FANG equivalent, we'll own you. And right now there's 118 of those companies. And when we launched 6.5 years ago, there was only 42. And we don't screen specifically for revenue growth, but the reason we made EMQQ and our confidence long-term performance is because I think it has the fastest growing. I think the emerging markets internet sector is the fastest growing sector ever in terms of public companies and their revenue. I mean, the last 11 years, the average annual revenue growth has been almost 38%, which is hard to do. And so revenue growth is the most important thing, but earnings growth ultimately is what you're after. And you can't grow your earnings without your revenue growing. So when we look at the PEG ratios, we look at the PE versus revenue growth.
So interesting what you said about the revenue growth rates. And we see that in the metrics. We ran a quick report. Advisors who would like to get it can send us a note, info@oshares.com. We'll be able to send it to you. We basically took a look at all of the components in EMQQ and in OGIG, shows people the overlap, or essentially the differentiation really being about 70%. And it shows the revenue growth. And in both cases, the forward revenue growth, so trailing is great. They're both over 40% trailing revenue growth. The forward revenue growth in both cases, over 40% on a forward 1-year basis. And what that essentially indicates is the revenue growth is expected to continue. These are estimates that are aggregated out of Bloomberg, where Bloomberg basically takes the inputs from so many research analysts that cover these different stocks. So it's not a matter of our opinion, it's more a matter of the aggregate opinion of the crowd, of the analysts that are covering all of these different stocks. Those that are in your EMQQ, that are in our OGIG. Over 40% trailing, over 40% forward 1 year, and that's in both cases. So I really encourage people to ask us for that. Kevin, before we go, where can people get more information on EMQQ? Your website's terrific. Maybe that's the place to start. What would you suggest?
Well, that's where you can find us, emqqetf.com. And you can also find me on LinkedIn.
That's great. And any closing comments on your outlook for the rest of this year and into next year?
Yes, I would say that there's a new chapter coming for the emerging markets and global internet space. And it's what's happening outside of China in emerging markets. China's e-commerce market is 4 times the size as the rest of the emerging markets, India, Brazil, etc. But what's happening in the non-China part of the emerging markets internet space is a very incredible story is shaping up, and the IPOs are coming fast. There's now more non-Chinese emerging market internet companies than Chinese, and the IPOs are coming from Turkey, from Uruguay, from Kazakhstan. Everybody's got their own localized Uber and their own localized Amazon, and it's getting quite exciting. So you'll see it in the papers as the India IPO pipeline starts to pour out exciting internet companies.
And so I guess EMQQ is a way people can get some exposure to those new names as they go public and meet your criteria.
Yes.
Great. I'm going to ask the producer just to bring that valuation slide back on, because this is kind of my closing comment for people. I think going back to the one with the line chart, please, would be great. Yeah. So Kevin made the point about what they say in Omaha, and buy when there's fear in the streets, or that type of thing. A lot of headlines generated this sell-off in tech stocks generally, some of them China, some of them others. The OGIG index is now the most attractive, or I should say, discounted valuation level of many, many years. So think about that when you're just thinking about allocating. The Omaha comment and where we are on this relative valuation cycle. If people think the NASDAQ 100 index is quite expensive, well, here's a somewhat similar zip code that is on a relative value basis, not as expensive as it has been relative to the NASDAQ 100. The second thing is to take a look at the next chart, this bar chart. It shows you the revenue growth rates of the companies in the OGIG index. These companies are growing. They are doing well. The growth rate looks to me like it's accelerating. So think about those things that you're allocating. Think about old tech versus new tech. We'll call NASDAQ 100 a little bit more the old tech. OGIG, a little bit more new tech. EMQQ is a little bit more new tech in the EM zip codes. So I think there's a place in people's portfolios for all of these different strategies. And for each advisor, each investor, think of the mix and probably be carefully about not leaving any out, because you think back a century ago, the Europeans who didn't invest in the US probably regret having made that decision. So diversify, choose your mix, and I think own a piece of each of these investment opportunities.